Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the dollar, it's holding up there, right? It's like there's so much negative news already priced into the US dollar. It is slowly squeezing to the top side, right? And the market, while they are slowly taking off the bets of a larger interest rate cut by the Fed, right? And if I just come into the interest rate probabilities, you'll see here it's only like marginally lower today than where it was yesterday. Tells me the news services are a little bit light on for news. 29% probability of 0.5%. You know what? I'm really confident with the 0.25%. The data has been, it's not terrible. It's just nice, ready for the Fed to cut. So that's what we need to be sort of focusing on as we come in to Wednesday's trading activity, right? So we do have the, like a bit of time in between now and then. But just where the markets are, it's like a little bit undecided, right? The dollar is squeezing to the top side. You can see pressure on the downside, euro, sterling, obviously the risk pairs, Aussie, Kiwi, and dollar CAD, right? The three risk currencies. They've just been getting pounded ever since the non-farm payrolls came out. And dollar yen, well, it's probably the best well-behaved instrument, right? And I still see the dollar going down after the Fed. And it looks like it's got a good setup. So what are we looking at today? Well, it really comes back down to just looking at the calendar and seeing where the pressure points are, right? Where's the key macros? What do we need to be looking for? Now, as we come into today's trading, consumer sentiment, okay, the NAB, one of the banks in Australia, conditions and confidence, yeah, have a look at those. I can't see them having too much of an impact. But what I can see impacting are the UK employment numbers, right? Sort of in amongst the German final CPI numbers. Those German final CPI numbers, nothing usually comes out of that. So, but what we are looking at very closely is the employment change. Okay, 123 expected, the range 66 to 170. And the unemployment rate, this is the key part, 4.1%. With 4 to 4.4% is the range for that data, right? Now, at the moment, sterling's under pressure, right? So, like the easiest trade for me would be weaker numbers, okay? A number towards that 66, a little bit of a blowout in the unemployment, and that is see sterling crash into the downside. It's a little bit of a tricky entry at the moment, but look at sterling against the, not just the US, against the other crosses, and you might be able to make odds and ends of it. This is like a little bit of a precursor to the major activity, which really kicks off Wednesday with the US CPI numbers and then flows into Thursday with the ECB interest rate decision. So at the moment, the only hard part about sterling against the US dollar is it's sort of in the middle of nowhere, right? And that makes it a little bit tricky. Momentum at the moment is down, weaker numbers, makes an easier trade to the downside an option. All right, guys, that's it for today. There'll be plenty more coming up. Don't forget, Wednesday, Thursday, the big trade days. Good luck and happy trading.